Hi guys, my presentation is on Set Protocol. Welcome to Set, a platform to create, manage and obtain basket of tokenized assets. So let's start with asset management. An asset management company is a firm that invests funds from client into pool investments, including stocks, bonds, real estate, etc. And the prime example of asset management company is mutual fund, which is a basket or a thematic or unthematic portfolio of varied equities actively managed by money managers. Example, if you want to invest in top nifty companies, then we'll go with Axis blue chip funds, where there'll be some allocation in top nifty companies, top nifty 30-35 companies. Or if you want to invest in steel based companies, then we'll go with a small case based on steel or small case based on gold, etc. So for a reference, we will take mutual funds. Now coming to what is DeFi. DeFi deals with everything finance, but in a permissionless and decentralized way. And how does it manage permission and decentralized way? Because they are built on Ethereum. They are smart contracts where rules are written, and then these smart contracts are deployed onto top of Ethereum blockchain. So popular DeFi systems which we have been talking about are DEX, insurances, stablecoins, and asset management tools. So the Set protocol is the prime use case of asset management. So let's come to the definition of Set protocol. Set protocol is an asset management platform that bundles existing DeFi protocols into fully collateralized baskets represented as ERC20 tokens on native blockchain. Set tokens allows others to replicate an identical strategy by simply holding the set. Okay, so what does this mean? That like similar to a mutual fund, where for I gave the example of blue chip fund. So blue chip fund will contain some 30-35 nifty companies. Similarly here, this set protocol will contain some ERC20 tokens which are DeFi tokens. Like there might be a set containing of complying of Aave, Compound, Uniswap, SushiSwap. Okay, so these are this is ERC20 token itself, which contains ERC20 tokens in the basket. Okay, and how it is fully collateralized, that we'll talk later. Trustless, of course it's trustless because there is no permission, no mediator required. Okay, so let's take some featured use cases of set protocol. So best use case is token set, which is giving entire UI to this set protocol, user friendly experience to managers, investors to buy, create, trade sets, etc. Then we come to DeFi Pulse Index or DPI. So it's a capitalization weighted index that tracks the performance of DeFi assets across the market. So let me show you. This DPI holds the best famous DeFi tokens like Maker, Curve, Convex. So on the basic side, it's developed from Set Protocol, but anyone can refer to it to know the rank of the given DeFi token. Like I want to know the rank of Aave, where is Aave going? I want to know the rank of Maker. So the allocation is in that way that the top ranked protocol is the most allocated one. This way the DPI works. Okay, then we have coin shares, gold and crypto assets in this, like similar to the gold based small case. We have gold based or crypto based set, where the investment is in both gold as well as crypto, so that the risk is mitigated by just investing in gold alone or in crypto alone. This comparison we have already done. User roles. So how this entire system is managed, we have three different user roles which caters to set protocols. The first one is investor, manager, and then we have developer deals with everything coding. Investor are the ones which deals with buying, selling, issuing and redeeming set. So how this is done, yeah, so suppose I want to invest one DPI, I want to buy one DPI. So I will integrate the set protocol or the token set with my wallet, let's say MetaMask. The MetaMask and the smart contract of this set will take one ether from my MetaMask, and to create one DPI it wants the collaterals. The collaterals are this makers, curve finance, convex, all these DeFi protocols are the collaterals. So to give us one DPI, the smart contract wants that these all should be present in the smart contract, else it can't give you the DPI. Just for one ether we cannot get DPI. We will get DPI only if the smart contract has these DeFi tokens as collaterals. So there are two mechanisms to have these tokens as collaterals. One is to the contract should interact with some DEX to swap this one ether with these DeFi tokens. Like the whichever DEX has the most liquidity, it will go with that and swap this one ether with all these tokens, and then in turn it will give us one DPI. Or there's one other mechanism, the issuance based. So for issuance, because smart contracts just wants that these tokens should be present as collaterals in the contract. So one way is to exchange one ether for the collaterals, another way is to have these collaterals itself in the wallet. Like my MetaMask should contain Aave, compound, or whatever collateral our set wants in that particular allocation in our wallet itself. So these are the two methods of buying, and vice versa for selling. Like the manager roles are to create trade sets and to get streaming fees as an incentive for all this by the investor. So how to create set? So manager has to do nothing, has to just choose the possible tokens he or she wants to keep in his basket. There are some conditions for which token should be kept in the basket. The prime condition is that it should be a ERC20 token. Then we have other condition as well, that it should be recognized on CoinGecko token list, and so forth. Then after choosing whatever tokens he want to keep in his basket, then he or she has to update the metadata, like naming the set, select the starting price, and just then he or she can just publish the set to the Ethereum mainnet. One advantage of this is, apart from all the DeFi tokens, famous or non-famous ones, we can also publish a set as a DeFi token while creating a new set. Like let's say I can publish compound. Like for my set I can choose compound, Aave, Uniswap, and along with that I can also choose DPI in my set, because DPI itself now becomes a ERC20 token. So that can also be another subcomponent of my set. Okay. Then manager can trade sets, like to keep like the one of the good trading strategy is to trade sets. The trade sets means by increasing or decreasing the allocation of compound or Aave or any ERC20 token in his set. And how they can do, the token sets UI has an integration with Uniswap or whichever DEX has the most liquidity. The token sets provide the integration with that, and we can easily change the allocation of one token to another token. Like if we want to change the allocation of index and move the index to Rook, then we can easily swap like how we does in DEX, and we can change the allocation. So this is part of a trading strategy which a manager uses, and in return they get streaming fees as an incentive from the investor. And then developer engage in every coding part, like creating smart contract and everything. So the conclusion, set offers to create and personalize your own set, an ERC20 token that represents multiple token as one. Okay, so instead of having multiple tokens in our wallet, we can just have one DPI which represents some percentage of each DeFi token, so which is relatively easier and less risky. Sets allow you to create token composition that are more valuable than their individual parts. So here in this case, one DPI is much more valuable than holding one maker, or if not maker, then less famous tokens. One DPI is much more valuable. Then set balances the risk and volatility by the diversity of portfolio. The portfolio is now diverse, and this way the risk is also mitigated. And definitely, managers will make income as streaming fees. So this is a active income method also. So yeah, that's it. Thank you.